The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for Meta platforms with the ticker symbol META. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So the market had a huge crash today. So let's take a look on the chart to see if we can find out the reasons why. Let me zoom in on the chart. It looks like Meta platforms finally got that breakout that we were expecting for a very long time. There was strong support at this 156 level, and there was resistance at the right around the 181 level. I'm gonna go and drag this across. Let's go and keep it orange. So we were inside this range for 3 months, pretty much since June, and we finally broke outside of it. We had a little breakout here, which led to a little breakout here. So this could just fail and we could come back inside the range. That's probably the higher probability. But if we do continue lower, we could double the range. And if we do double the range, where is the next target, or where can prices go? It can reach right around the low 130s. So if this breakout continues to drop lower and lower, then the next area it wants to reach is right around the 130s. Now if the breakout fails, or at least momentarily, we're going to come back to test this level at the 156 level, and then we can see lower prices. Either way, I'm still expecting lower prices. I don't think we have bottom. It's just a very low probability to pick a bottom. It's very profitable if you can do it, because yeah, you're in it at the lowest point and you could ride it up all the way to the highs, but it's very, very low probability. It's near impossible almost. Sometimes you think it's a bottom and it just goes down lower, or it does a bottom type of pattern. We go up a lot and then we come back down right even to that point. So it's very hard to pick a bottom. It's not even advisable, but there are some strategies out there that pick bottoms, and if they can make it work, they can make it work. So I'll show you guys the overall downtrend pattern, and let's go and put it on the chart. So it looks like this was definitely the downtrend pattern right here. You can see that prices bounced at the lower side of the range at this 156 level, and we were supposed to go back up to the highs at the 182 level, but when you could see that we couldn't, because we stopped at the midline, or the 168 level, and then prices dumped down. If you zoom out on the chart and you do a bigger picture, you can see the reasons why. Every time we came back to this trend line, we saw a massive sell-off. So you can see that prices bounced from the lower side of the range, but it came back to that trend line right over here, and then the next day later there was a massive gap down and prices sold off. So we need to break outside this range pattern, because there's a downtrend in play that's taken precedence over this range pattern. So expect lower prices. I don't think we have bottomed, and I'll go over the targets that I think pricing can go to on the weekly chart. But again, it could take time, just like how we were expecting the breakout to occur. It took several weeks, several months to get to this level. So it can draw out very slowly, but either way, we're still going to be looking for lower prices. So let's go and wrap it up on the weekly chart. So the reason I think the market sold off this harshly was because it trapped in a bunch of longs. So it's just more profitable for traders to bring the market down, because they saw the liquidity and trapped a bunch of longs, and market just got rejected off of these higher levels, and we got sent down pretty harshly. So it's pretty much just a trap for the longs. And also fundamentally, it's probably because the dollar is getting stronger and stronger. Let's take a look at that chart real quick, the DXY, and you can see that we're pretty much at 20-year highs. We're at the 110 level, pretty much near the top of this uptrend that prices are inside of, and we've been inside of a bull trend for the dollar pretty much since it bottomed back here in 2008. So this is definitely going to see higher prices. I would say my target, if I do a measured move, I think this target is very reliable, is right around the 121 level, and pretty much back here around the 0201 highs, which are marked with a horizontal line. So why am I showing you guys this chart? Is because equities, commodities, a lot of things are getting hammered because this dollar is getting stronger, and once we reach this measure move, we could see a relief, a huge relief, maybe even a top for dollar and a bottom for commodity equities and commodities. So as right now, it looks like the dollar is getting stronger. If you guys want to learn more about why a strong dollar is bad for equities and commodities, you can go look at Brent Johnson's video. He can explain it much better than me, but it's pretty much like a inverse correlation. As long as this keeps on going higher, we're going to see lower and lower prices, and it does look like this wants to go higher to this 120 level. Is it guaranteed? No. There might come a point where the dollar is getting stronger and also equities start going up, but as right now, it looks like an inverse correlation, and the dollar is definitely getting stronger. So let's switch it over back to Meta Platforms. Just quickly wrap it up on the weekly chart. Not really much to talk about. We're still below the weekly EMA. You can see that below the weekly EMA can't be bullish, versus before above the weekly EMA we are going to be bullish. So this is pretty much the inverse or the opposite. Right now we're back at 2020 price levels. I'm looking for the lows of 2020 to be knocked out eventually, and that's around the mid 130s, and maybe if we get really bearish we can reach the low 120s. So those are my two targets, and it looks like prices are coming down to hit those levels because there's a bunch of longs who have the stop losses here. They put it below these swings, and traders know that, and they're going to bring it down to hit those stop losses to trigger more selling. Because if you think about it, someone entered right around this 160 level back in 2020, and they were like, okay, if prices go below this 160 level, I'll put my stop loss at the 136, and if we go below that, we're probably going to go much lower. So they put a stop loss. So there's a bunch of stop losses here from traders who did not take profit because prices went all the way up, and they were looking maybe for the $400 level or the $500 level, whatever. They probably didn't take the profit. Now prices are coming back, and we hit the break evens if they moved it up, but there's still a lot of stop losses or orders at these lower price levels, and that's what we're coming to orders at lower price levels. So that's pretty much everything I have for Meta Platforms. Finally got that breakout. It could fail and we could see a bounce back up, but in the medium to long term, I'm still expecting lower prices for this stock. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel. Since you might be surprised at what you can learn, leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time, and bye.